All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and the Fed pivot is officially over. Even though the market didn't move much today, we closed within the first candle of the CPI being released. Believe it or not, this was actually the smallest reaction to CPI over the last 10 CPIs. Even though we didn't move much on equities, the bond market moved a ton, and this didn't happen yesterday. None of this existed until today. Now the bonds and the Fed futures, they are pricing in no rate cut for 2023. If you don't understand, this is huge because throughout the last month or two, as we've been going up, one big thing people have been talking about, they're saying, well, the Fed's going to pivot. The Fed's going to pivot. The bond market was getting dovish. The bond market was getting ahead and saying the Fed is going to pivot. They're going to at least cut one time by 2023. Well, after this report and lack of movement on equity, the bond market is saying something completely different now. So we got a lot to talk about. I got a breakdown for you. We're going to go over what happened. If you're not aware, CPI came out today, and the month over month, that came in line. It didn't really move much. And remember, they did do revisions on Friday and yesterday, so that kind of got us ready. But the CPI year over year, that is the part that went up. But it's very simple. We talked about this one yesterday. The components of the CPI, that's where people got a little bit freaked out, a.k.a. goods inflation did not go down as fast as expected, hence the higher year over year. And then service inflation, even core services excluding housing, they all went up, although core services excluding housing, Powell's favorite indicator, it did come down at a slower pace than last month. But all in all, it didn't really cause the biggest market reaction. The bonds moved a ton. There was a little bit of the Bank of Japan effect because they did nominate Umaya. I don't even know. Yeah, someone correct me. But either way, there was a lot of things going on, and now where we move forward from here, it's gonna be big. You have retail sales in the morning, and that could really move some things. But really, all eyes are on the PPI right now. But I'm telling you, it's not even saying go look at the data, next data, next data. No, it is saying now, how does the market digest this new development in the bond market? Because one of the biggest bullish indicators of this year, it's kind of just flown out the window. There is no more rate cuts priced in for 2023. So, Chad, I hope you're ready. I got the plays. I got the keys. I got all of it. So I hope you're in the game. And if you're feeling loving right now, shout out to Airbnb. Like that video. Amen. Amen. Okay. Run it, baby.
Working to the couch, it's the 2020 less. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel less a blessing. I just want the lesson. I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, I hope that little explanation about what we got today really gives you an idea where we're at. And this is what we were saying yesterday now is we're most likely going to get a bigger reaction in the follow-up days. We've seen smaller CPI days, and especially after last month's CPI, where we're confirming inflation coming down, really the CPI has kind of lost a little bit of its juice. So we're going to see where things go from here, but it's seeming like the next couple of days, that's where we're going to get the follow-up. And like I've been telling you earlier, or even from yesterday, a lot of people are going to bring up, well, we do have one more inflation reading before the Fed. Now, keep that in mind, but if you really want to understand why we were so neutral, I think this is a great way to explain everything. CPI today wasn't encouraging, but it wasn't a red flag. We got to realize that, okay, inflation's coming down. It's not coming down at that same drastic pace that people were getting really bullish on, but whatever did go up, there was signs of things slowing down, so it's not as if it was a giant red flag and now losing a little bit of that juice. I think this is why we got the reaction that we got today. Now, coming into key number 2, this is the whole point of what I'm saying here. The big reset that occurred was in the bond market. Literally, there is no more rate cuts being priced in for 2023, but this wasn't the story as of yesterday, the day before that, the week before that, or anything. Really, we were saying, okay, shorter term Fed futures are going up a little bit, but there was that little rate cut that was still priced in by the end of the year. That has now disappeared. Every single rate hike expectation now, all across the Fed futures, they all went up, and the only rate cut right now is priced in for 2024. And now this is going to lead us to the next step. It's probably not going to happen anytime soon, but this is what we got to watch out for, because one more hot jobs report, one CPI, whatever it is now, if those rates start creeping up and the Fed futures are now playing along with Powell, the only person or only thing not playing along right now, it is the equities, but the door is being opened now for an extra rate hike this year. If you watch the beginning of the year videos, we were talking about this. Well, Powell could only do about 75 basis points of rate hikes, right? We were saying he could do 150 and a 25, or he could do 3/4 point rate hikes. Well, think about it now. It's February. We got 1/4 point. You're going to get the next one, and people were thinking the third one after March would be the final one. But even today, Morgan Stanley and a couple of other banks, they're saying, well, maybe we get more. A couple of the Fed speakers, they even brought that up here. But what today's kind of showing with the bond markets, and now that the bond market's playing along, maybe that terminal rate increases, and maybe if you check to what people were expecting even November, December, we might have more rate hikes in store, especially now if we get any data that could back that up. So that's very important there. That is number 2. But now to your final key, and hopefully this could help you understand where the market is, or at least this is where I think it's going and how I'm balancing my plays. But I think it's very simple. It is pretty much going to be harder to justify much higher gains, because now inflation, it's not the most optimal story of coming down, and now the rates are still high and we're pricing in more higher rates. Can the market hold up and go higher? Yeah, but it's not going to justify this moonshot move with a bunch of other gains. And now, though, since things are still better and we've had that 3 months, it also makes people less wary of a major sell-off. So I hope you could play this accordingly. Really, I'm thinking it's going to take some real strong, compelling evidence in either direction to show, no, growth is really here, inflation's really coming down. You need a really big justification. I mean, the Fed is data dependent, so now you are going to have to be data dependent. But in the meantime, we're probably going to stop selling off and buying up on such further future expectations, and that's why the data, it will get tricky here, but hopefully you see what I'm saying. There's room to kind of bounce around here. We're getting rid of this whole, okay, everything's going to die mentality, but also everything's going to go up and go to the moon. Well, that is definitely getting put to the test here after this report and what the bonds are saying. So overall, it's going to be exciting. I told you we got some data sets tomorrow. You do have the Fed minutes next week, and that will kind of do its own little work here. So we'll see what data comes out tomorrow. Thursday, PPI, initial jobless claims. That's probably going to be the big one. And then we'll see how these next few days of follow-up go, because remember, last CPI, that is where we got all the action. So I hope you're ready, but let us get into the plays. So, right off the bat, I got 3 different plays for you. I only made 1 play today, and actually, it's going to show up here as play number 1, but rollie on my wrist, let's go Airbnb. They had a solid earnings. I'm going to be watching Airbnb, but I'm putting Booking on here again because they have yet to report, and their report will affect Airbnb, but I'll show you something with it today when I go over the play, but it's very simple. Airbnb had solid earnings, like it was good. They guided up. They beat on the quarter, and now on top of it, we were going over some things, and we found out today that Airbnb is one of the top 10 most shorted stocks right now, and it is already costing shorts probably the most amount of money. I think it's over $2.6 billion, and that's before the stock went up 10% after hours. So here's the chart for that, and this is from S3 Partners. If you know, you know, but they are number 7 right now. It is one of the least profitable shorts held by hedge funds in the last 30 days. So you can see that that was before the earnings. So I think it could give it some juice, but there's a lot of people. I mean, it's kind of hard to deny how good Airbnb has done, but we've seen it in the past. We've seen some crazy moves on Wall Street, and they love to beat it down. So I think this is going to be big, but now on top of it, I may just look at Booking as a sympathy. We got Airbnb in the long term. We got some leaps that are in the money now off of that move, but Booking is a great big dollar for dollar mover today. So this is what I ended up doing today. You'll see what I'm talking about, but I only grabbed 5 shares of Booking for the run-up, $24.33. Again, it's $2,400 a share. It's expensive, but I was able to catch almost $40 a share. It even went up a little bit higher there, but the point is you could actually do a lot of damage with this stock, and I think it is going to be pretty big. So I like Booking as a follow-up, and like I'm saying, they haven't reported yet, and that's one thing to keep in mind because whenever Booking reports, well, it's going to affect Airbnb, but they're also doing their little breakout there. And I've showed you yesterday, they have been leading Airbnb. So we'll see now after that big drop, have they matched up here a little bit? Let's see on the yearly, almost. So there's a little bit more. We'll find out what happens, but that is play number 1. Then play number 2. This one's a little surprising. Coinbase. I think it's a really good 50-50 here right now. What I mean by that is if you go and look at the daily chart, you'll see what I'm talking about. I mean, well, that's a bad daily chart, but let's go to the 100-day here, and you'll see they've kind of came back after their little February just huge bounce. But what I'm talking about 50-50, they could either start to run up back here. They were even on that list of shorts as well, or they're probably going to start pummeling down. And the reason why now, you're going to get this death for crypto from the regulations, or as that bad news with what the SEC and the stable coins and all of that stuff, it'll fade, and then they'll be able to work their way back up. So I think it's going to be interesting. Going to be looking at that one tomorrow. And then finally, play number 3 now, it's going to be Google. And why I like them is just simple. If it gets bullish or bearish, like I'm saying, it's not like the market's going to do a full moonshot. But remember, there is underperformers. I should put Amazon on this. I'm still holding both of those, but I'm thinking if we are going to get any upside, if we are going to get any sort of squeeze and the market wants to brush off whatever it is temporarily, I'm liking Google, and I think Google needs to play along if you want a bigger rally. So what I'm going to be watching for, the $90 level, that's really where I want to average down. I think it came as low as $92 today. Otherwise, it looks like it might be able to level out around this like $93, $94 range. Again, it came down there a little bit lower. I guess it's kind of like Coinbase, but Coinbase, you know, they're at the January 30th price. But I think it's going to be interesting. Still in those plays, going to watch it, and I think it will be exciting. But those are the main plays. As far as everything else now, I only made those plays there on Booking today, but we'll get into the holdings. My NQE's down and the bonds, literally. My worst case scenario happened today. Pretty much the NASDAQ didn't move. It barely went down, and then the bonds dropped even more. I was expecting it would be more bullish for the bonds because I was thinking, okay, well, if inflation is still a little hotter, the bond market already led into it, but they proceeded to sell off more and now price in this whole idea of no rate cuts at all. So I think there's still limited downside, but that could change quickly. But I'm thinking that this shouldn't last for too long, where if the bonds really do get bad, this guy should start coming down with it, and we should see a bigger sell-off and benefit from there. But besides that, I like everything else that I'm holding. We have a lot of share plays, so that's the one thing I'm hoping for. I've just kind of been in like purgatory as we've been adding them a little later here. This value hasn't changed too much, but some of these plays back and forth, we got to recover a little on Uber. The Oxy and Energy came back. Google, again, it's not down too much. The bank stocks were up on those, and we're still holding, and I really like the banks. And really, this whole breakdown here I like. I got the 2 laggers, Amazon and Google. Amazon's up. Google's barely down. Got China exposure, China AI. I like that again. The banks, a little bit of travel related to Uber and Airbnb. Then we got some energy, and then there's still a couple of more again, like the LMT and everything else. And yes, I'm still holding like the Sound. That plays down like $40. The Enphase is still absolutely murking off of those earnings. That one's a wild one, but got a lot of room to average down. But I like where I'm holding on here, and I think even in this marketplace, a lot of people are saying, when am I going to close the NQ? When am I going to do that? I'm going to wait till March now, and let's see if I end up being wrong. I end up being wrong, but the way I'm looking at it is like I'm saying, we could still go up, but I think the moonshot is going to be limited. I think upside now is going to be very limiting as long as rates and rate expectations continue to go higher. Otherwise, I do also think that downside will be limited as well. So I think we're going to have to play a little patience. I like what I'm holding. I got the NQ for 31 days, and I will need to roll over the bonds, I believe, in about a week or two. So other than that, I'm excited for Airbnb tomorrow. I'm excited for everything else, and let's see what this data and everything provides. And the bond market is also getting a lot of excitement, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the the armor on. I need the helmet shining. I need you to remember, if you're doing good, I hope you enjoy the moment. I hope you take it in. I hope you understand one day you'll look back and you're going to wish you were there. And same thing on the reverse. If you suffering right now, if you going through something, take that as a sign of joy. Build the endurance. I'm going to keep telling you, it's still just the first quarter, baby. So I know you're ready for it, but take heart in all of it, good and bad. We all in the same boat. Make sure you get that long term and keep it going, Chad. This is just the beginning, and literally every other week things are changing big, even if you're only just seeing prices do one thing. So, Chad, I love you. Drink that water. Stay hydrated. Stay healthy. I'll see you in the morning. Let's get to the middle of the week so we can close it out. And horn.